Good morning, everybody. Hey, welcome back from the weekend. Today is Monday, July 15th. Glad you joined us today. And hey, if you like what we're doing here, please like our page, Statler Financial Services, and share this video with your friends and family on Facebook. We'd really appreciate it. Hey, as we get ready to dive into today, waiting on Dave to kind of log in, I just want to remind you again about some of the free reports that we do have and do offer out there. And the first one is, and really the main one today is going to be the retirement strategies report that we've put together. And it's easy to get. All you have to do is text the word retirement to 863-285-3815. Hey, on Facebook, you can just look above this post, this video, and there's a link right there. You can select that link. It'll take you right to the page to request that report. Yeah, thanks for joining us today. Hold tight. Dave will be with us in just a few moments.
8:38. That's 22 before 9. Time to check it on your money and find out what's going on Wall Street and around the world. Monday morning, record closes at the end of the week last week. Can we keep the momentum going? Let's find out. Downtown Sebring, we head to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. How are you?
Hey, good morning, Dave. Got a little congestion here I'm trying to beat out. But, hey, doing well. Had a great weekend, and I hope you did too. The market sure had a great day on Friday.
Yeah, they did, and it managed to keep the green ink through the weekend, which really surprised me. Dow up 244 points on Friday, NASDAQ up by 48, S&P was up almost 14. I did double-check, are all three of those record closes, or is it just the S&P?
I know the S&P 500 is a record close. I'm not sure about the other two.
It's nosebleed territory without a doubt. If we're 5 or 10 points short of an all-time record on the Dow, what the heck? It's still nosebleed territory, and it looks like the momentum is going to continue. And that kind of surprises me a little bit because the economic report out of China, this is one of those bad news equals good news, I suspect, for our investors. China released their gross domestic product figures for the second quarter, and they grew by, quote, only 6.2%, but got to keep in mind that's a disaster by Chinese standards.
Yeah, it is, and the United States would kill for that kind of growth on a regular basis, and for them, it's the worst quarter they've had in like 27 years, Dave.
Yeah, that's amazing. You got to keep in mind that number one, it's a command and control economy, so when they admit it's bad, it's really bad. But yeah, 6.2%. We'd be raising interest rates with the Fed every doggone month if we were growing that much because we'd be worried about overheating.
Well, they do, but they're saying that a lot of that is due to the trade issues, and so maybe, just maybe, some of this is going to come to fruition, and maybe it's going to help us with our position and bring China back to the table quicker to help their growth.
Which might very well be why our markets are staying in green ink, because a major trading partner going through difficulties would not be good news unless it was China blaming it on the tariffs. Kind of harkens back to something I said probably 6 months ago. We're far more capable of wrecking China's economy than they are of wrecking ours. We can both cause extreme pain, but when it comes time to actually destroying an economy, we can do more damage to them than they can for us.
Well, that's true because we buy so much more stuff from them. I mean, that's one of the issues that Trump's had in this whole process is that, the trade imbalance between us and China is the cause of that. And so because we import so much stuff from China, you're right. Those tariffs will definitely affect them far more than they'll affect us.
And it's beginning to show with that quarterly report on their gross domestic product. Like I said, it's a command and control economy. Nobody really believes 6.2% is the real number. But if the government's willing to admit it stinks that badly relative to history, I wonder how bad it really is.
No, that's true. And we'll never know, will we?
Probably not. The other big macro news item coming out today, and it's odd when one company having a sale becomes macro news, but Amazon.com's Prime Day is today. Most of the biggest specials are on Amazon branded stuff, but they got discounts around the thing. And this is going to be kind of a harbinger as to discretionary retail, internet sales capabilities and everything. It's just kind of a periodic temperature take on the marketplace every year, isn't it?
Well, it is. It's going to be like Black Friday on the internet today. And so, and it's more than a day. I mean, they're going 48 hours. It started at 3 a.m. this morning. So, it's going to be a real test to see what kind of numbers they pull in. I was watching the news this morning. They're saying about how, I think in Seattle, they're going to walk out for 6 hours, and they're calling for a boycott because of wages. And so those type of things. So it will be interesting to see. I don't think that'll have any effect on the whole deal today. People are going to buy because it's cheaper and it's on sale. And so that's why they're shopping.
Absolutely. And like I said, analysts from one end of the Wall Street marketplace to the other are going to be taking Amazon's success at this Prime Day as being a harbinger of how well we're going to do for the Christmas season ahead and the future of internet versus brick and mortar sales. We're going to be reading all kinds of junk into these tea leaves, aren't we?
Yeah, we really will. And before we get on to the earnings report that we have, I do want to talk about an interesting article I was reading, Dave. It was talking about the Vice Index versus retail sales.
What's the Vice Index? What's that?
I think that's like cigarettes, booze, gambling. Cannabis is now in there. Those type of vice
stuff.
Right. There you go. Versus retail sales. And what it indicates is that retail sales are starting to stall. And the article made some good points. The Trump tax effect is pretty much gone now, right? When we've seen a year, we've had those refunds, we've spent them, and so that's pretty much gone now. And so, in the summer spending, people plan for that a year usually in advance because they're going to do taking vacations, and if they're big, they're going to spend and budget those for that cause. And so they're really saying that in the fourth quarter, we could really see retail sales start to stall. And so it's going to be interesting to kind of keep an eye on this to see just how this Vice Index and retail sales, how close they really are related.
Oh, was the article saying they're tracking, or are they going in opposite directions?
No, they're saying basically because people are running out of money to spend because the tax cuts are gone, that we're going to see we're seeing less spending in gambling, and so they're saying that that's an indication that people are going to spend less on retail. And the other thing I saw was interesting is that cannabis, it's the big thing now, and they're talking about retail sales when cannabis first gets legalized is like $2,000 to $2,500 a pound, and about a year to 2 years later, it gets down to $800 to $700 a pound because of supply and demand.
which kind of makes the grow your own guys not quite look like the rocket scientists they think they are, right?
Exactly. More production means, more supply. More supply means lower price. It also means lower tax revenue for those states that were counting on higher tax revenue.
That's the point. The whole motivation behind legislatures passing these proposed amendments saying, hey, let's legalize weed, the whole underlying motive is, hey, wow, this is a tax bonanza. And if the price goes down by 60%, all of a sudden the tax base goes down by 60% too, doesn't it?
Exactly. And so I thought that was kind of a little interesting article, something to kind of keep our eye on as we finish out the third quarter and head into the fourth quarter and see what retail sales really start to look like.
That will be intriguing. Earnings season begins in earnest this week, and we have one big one to kick it off before we get that whole flurry of financials tomorrow. Citibank really kicked butt, I gather.
They did. Citibank came in and beat analysts. They were expected to come in at about $1.80 a share. They came in at $1.95, and the reason for that was they had this huge IPO that came out from a company called TradeWeb. They're a bond trading platform. And so that added $350 million gain to their bottom line. And so revenue really was pretty good. It's expected to come in at like let's see, 4.5 billion. It came out like 4.8 billion. So they beat across the board. But their stock's not getting a big boost. I mean, it's up 0.75%. And I think, Dave, like you and I were talking beforehand, it's probably because it's a one-time deal, right? That IPO was a one-time cash influx, and so it's not repeatable.
But it was still from what you read anyway. They would have beat even without that IPO in the process.
They would have beat by about 3 cents a share. Would have been a beat, but not nearly like they did.
Just not as spectacular. I was kind of looking at Citibank as being a kind of an interesting canary in the coal mine because they're such a heavy consumer bank that Citibank doing well is kind of a good read on the consumer financial markets overall in terms of the health of them. But the other side of the fence, too, is they're big on credit cards, and their credit card balances are through the roof. Then that doesn't necessarily mean long-term good for consumers, right?
Well, that's true. So it's going to be interesting to see how this reflects on the other banks that are coming out and how close they are related and how much this one-time event, this one big IPO, how beneficial was that to Citibank compared to the other banks?
Understood. It always helps to remember, too. I mean, Citibank and J.P. Morgan's business plans are about as far apart as apples and oranges, even though they're both considered financials.
Exactly. One's more consumer-based, one's more business and investment-based. And so, but we do have a slew, like I said, a slew of banks coming out tomorrow. So it'll be interesting to see how those measure up.
Absolutely. The deluge begins in earnest tomorrow. Setting the table for this morning, green day, like we said at the outset on Wall Street on Friday. Dow starts the morning out at 27,332. NASDAQ starts out at 8244. S&P starts out in record territory at 3,013. And those are great places to start earnings season. Phillip, Monday morning is upon us. Which way are we heading as we get ready to open up today?
Right now, David, it looks like we're going to continue that green streak and head upwards. So the Dow's up about 44 points right now. The S&P 500 is up about 5.5, and the Nasdaq's up 18.25 points. So gold and silver are both heading up. Gold's basically flat, is up at less than 0.1%. However, silver is up about almost 0.75% this morning to $15.34. And then we got the lovely crude oil heading up about 0.33% today, up to $60.40. And let me just add, interest rates are heading back up on the yield. They're up to about, let's see, a minute ago it was up to 2.13%.
That's a nice change to see them going closer to being in the right direction for a change. World markets, the Asian numbers are going to look real interesting overnight tonight because now we got the Chinese GDP numbers. Before they got those, they were evenly up. So was Europe this morning, midway through their day. Phillip, somebody need advice to stabilize and have a fruitful retirement fund. How do I get a hold of you on the phone?
Hey, it's a great time to make sure that you've got everything the way it needs to be for retirement. Let us help you coach you through retirement. Call us at 863-382-0037 to schedule your free financial x-ray analysis of your current portfolio. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
Which streams at News Talk 730 a.m. like we're streaming right now on 1057lightfm.com. Phillip, thank you very much. We'll catch you tomorrow.
All right, thanks, Dave. You have a good one.
Enjoy. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Stop everything you're doing.